If you think your 2025 tax return will look more or less the same as last year, stop right now, because that assumption could cost you real money. The return you will file in early 2026 is not just another routine filing. It reflects one of the most important shifts in U.S. tax rules in recent years, driven by a mix of new legislation and IRS adjustments that directly affect how much of your income is taxed, how much you can deduct, and how you must prepare your documentation. Before we go any further, make sure you're subscribed to this channel and that notifications are turned on, because everything we cover here is designed to help you understand changes before they hit your wallet, not after you've already filed. The 2025 tax year sits at a very particular crossroads. On one side, we have the usual annual IRS inflation adjustments, which quietly but steadily reshape tax brackets, deductions, and thresholds. On the other side, we have a major legislative intervention, the One Big Beautiful Bill Act, signed into law on July 4, 2025. Together, these two forces create a tax environment that is very different from what many taxpayers are used to. What makes this especially important is that several provisions of this law apply retroactively to income earned in 2025. That means the decisions you made this year, the way your income was structured, and the records you kept will directly determine how much tax you owe when you file in 2026. There is no going back to fix it later. Understanding the rules now is essential. One of the biggest areas of change is the standard deduction. For most Americans, this is the single most important number on their tax return, because the majority of taxpayers do not itemize. For 2025, the standard deduction has increased significantly. Single filers and married individuals filing separately can deduct $15,750. Married couples filing jointly can deduct $31,500. Heads of household can deduct $23,625. These increases alone mean that a larger portion of your income is automatically shielded from federal tax. But that's not the whole story. If you are 65 or older, the law introduces an entirely new layer of tax relief. A new senior bonus deduction of $6,000 is available on top of the existing deductions, subject to income limits. For many retirees and older workers, this can dramatically reduce taxable income, especially when combined with Social Security planning and retirement distributions. Tax brackets themselves have not changed in terms of rates, but the thresholds have moved upward due to inflation indexing. This protects taxpayers from bracket creep, allowing income to rise modestly without automatically pushing them into higher tax rates. At the same time, the current tax rate structure has been made permanent, removing years of uncertainty about whether rates would suddenly revert to higher pre-TCJA levels. Then there is the change that has probably generated the most confusion and discussion: the treatment of tips and overtime pay. For the 2025 tax year, eligible workers may deduct qualifying tipped income and qualifying overtime compensation tied to hours worked beyond 40 per week under federal labor standards. In practical terms, this can mean that certain categories of income are effectively not taxed at the federal level. However, this benefit comes with complexity. Employers are not yet required to separately report these amounts on W-2 forms for 2025. That shifts responsibility onto taxpayers. If you qualify, you must be able to support your deduction with pay stubs, internal earnings reports, or detailed records. This is a major departure from the everything is on the W-2 mindset many workers rely on. Another major shift affects taxpayers who itemize deductions, especially those living in high-tax states. The cap on the state and local tax deduction, commonly known as SALT, expands dramatically. Instead of the long-standing $10,000 limit, itemizing taxpayers may be able to deduct up to $40,000, subject to income-based phase-outs, through 2029. For some households, this changes the entire calculation of whether itemizing now makes sense again. Retirement contributions also play a role in this new landscape. While the core rules remain intact, contribution limits have been adjusted upward for inflation. This affects how much income you can defer, how much you can deduct, and how you plan both short-term tax savings and long-term retirement security. What ties all of this together is one central reality. The 2025 tax year offers meaningful opportunities to lower your federal tax bill, but only if you understand the rules and prepare correctly. This is not a year where you want to rely on assumptions, outdated advice, or last-minute guesses. Documentation, planning, and awareness matter more than ever. In this video, we're going to walk through every major change that affects your 2025 return filed in 2026. We'll explain what changed, who benefits, where the risks are, and what you should be doing now to avoid surprises later. By the end, you'll have a clear framework for understanding how these new tax rules affect your situation and how to approach your next filing with confidence instead of uncertainty. So you thought you had your taxes all figured out, right? Well, think again. The return you are going to file in 2026 for the 2025 tax year is getting a massive shakeup. And we are here to walk you through exactly what it means for your wallet. Here's the big question on everyone's mind. Will you actually pay less? You know, for millions of Americans, the answer is a definite yes. But unlocking those savings really depends on you understanding a whole new set of rules that could completely change your final tax bill. And what is the reason for all this? It is a new piece of legislation called the One Big Beautiful Bill Act. Now, this law, along with the usual inflation adjustments from the IRS, is basically rewriting some major rules that are going to affect pretty much every single taxpayer. Okay, so here is our game plan for today. We are going to start with a major shakeup, then cover the big changes that affect most people. We will look at some brand new breaks for specific groups, unpack the new rules for itemizers, talk about some risks, and then wrap it all up with a clear action plan. So you are totally ready for 2026. So what makes 2025 such a landmark year for taxes? Well, it is kind of like a perfect storm in a good way. You have got your routine inflation adjustments meeting these huge new legislative changes. And what that means for you are bigger deductions and new opportunities that we just have not seen before. Now, let us get into the changes that are going to have the biggest impact, the ones that will affect the vast majority of us right out of the gate. These are the foundational shifts you absolutely need to know about. Get ready for this number: $31,500 for married couples filing jointly. That is the new standard deduction. That is the amount of your income that is now completely shielded from federal tax, before you even think about any other credits or deductions. This is a huge increase. And hey, this awesome benefit is not just for joint filers. As you can see right here, the new higher standard deduction applies across the board. Single filers, you get $15,750. Heads of household get $23,625. For a lot of people, this one change alone is going to lower their taxable income and might even make filing simpler. On top of that, we have what is called bracket creep protection. Now, the tax rates themselves, 10%, 12%, and so on, they have not changed. But the income levels for each of those brackets have gone up. So, what does that mean? It basically prevents you from getting pushed into a higher tax bracket just because you got a cost of living raise at work. It is a really important inflation adjustment. All right, now let us get into some of the most targeted and honestly, some of the most powerful new changes. We are talking about brand new tax breaks designed specifically for seniors and for millions of service workers out there. Let us kick things off with a really big one for older Americans. The new law brings in a completely new bonus deduction aimed squarely at taxpayers who are 65 or older. This is a major new benefit, especially for retirees and older folks still in the workforce. And here is the number to remember: an extra $6,000. Now, this is not a replacement for anything. It is a bonus you can claim right on top of that already bigger standard deduction. Think about it. For a retired couple where both spouses qualify, that is a potential $12,000 extra deduction. Wow. Okay. Next up, something that is going to be a game changer for millions of people in hospitality and service industries. For the 2025 tax year, there is a huge shift in how certain tip and overtime earnings are treated. For many people, this income could now be effectively tax-free. So how does this actually work? Well, the new law lets workers deduct qualified tips and overtime pay for any hours they worked over 40 per week. But, and this is so important, Employers are not required to report these amounts separately on your W-2 just yet. That means the responsibility is 100% on you to track it using your pay stubs and tip logs. So far, we have talked a lot about the standard deduction. But what if you itemize your deductions? Well, there is a game-changing update for you too, especially when it comes to state and local taxes, what everyone calls the SALT deduction. For years now, taxpayers who itemize have been stuck with this number, $10,000. That was the absolute maximum you could deduct for all your state and local taxes combined. Property tax, income tax, you name it. And for folks in high-tax states, this cap was a major frustration. Well, for 2025, that cap has not just been raised, it has been quadrupled. The new limit is now $40,000. This is just massive relief for homeowners and high earners in certain states. And it is going to make itemizing a much more attractive choice again for a whole lot of people. Now, with all these great new opportunities comes some new responsibilities. You knew there was a catch, right? These changes, especially around the new deductions for tips and overtime, create some real challenges. And it all boils down to documentation and just keeping good records. You know, this quote from the source material really sums it up perfectly. Because the reporting systems have not totally caught up with the new law, the burden of proof is really on you, the taxpayer. So, careful record keeping is not just a good idea anymore. It is absolutely essential if you want to claim these new benefits correctly. Okay, so we have covered the what and the why. Let us finish up with the most important part. What should you be doing right now to get ready for filing your 2025 taxes in early 2026? Here is your checklist. First, get your records organized, especially those tip logs and overtime pay stubs. Start now. Second, you have got to evaluate your strategy. Actually run the numbers and see if the huge new standard deduction is better for you than itemizing with that new higher SALT cap. Third, if you are 65 or older, make sure you know exactly how to claim that bonus. And finally, stay informed. Keep an eye on the official IRS website and their publications as they get updated. So, as we wrap up this explainer, let us just boil all of this down to the most critical things you absolutely need to remember for this upcoming tax season. Let us recap. Standard deductions are way up. There are brand new, really powerful deductions for seniors and for tip and overtime pay. For all you itemizers, the SALT cap is 4 times higher at $40,000. But to take advantage of any of this, your personal records are absolutely key. Your biggest decision now is to start planning for whether you will take the standard deduction or itemize. Look, these changes are pretty significant. They create both amazing new opportunities and some new complexities. But now you have the roadmap. The only question left is, with this knowledge, are you ready to navigate these changes and file your smartest tax return yet? Now that you've seen the full picture of how the 2025 tax year is changing, one thing should be very clear. This is not a business-as-usual filing. The rules that apply to the return you'll submit in 2026 affect how income is defined, how deductions work, and how much responsibility falls directly on the taxpayer. The increase in the standard deduction alone will simplify filing for many households and reduce taxable income automatically. For seniors, the additional bonus deduction can be a meaningful form of relief, especially in a period where inflation continues to pressure fixed incomes. For workers earning tips or overtime, the potential to deduct that income opens the door to real tax savings, but only if records are accurate and complete. At the same time, the expansion of the SALT deduction changes the math for itemizing deductions, particularly in high-tax states. For some taxpayers, itemizing may finally make sense again. For others, the standard deduction will still be the better option. The key is that this is no longer a one-size-fits-all decision. What makes this tax year especially challenging is the gap between what the law allows and how reporting systems are catching up. When income is not clearly broken out on official forms, the burden shifts to you. That means organization is no longer optional. It's essential. The most important takeaway is preparation. If you wait until early 2026 to think about these rules, you may already be too late to take full advantage of them. Understanding what qualifies, what documentation is needed, And how deductions interact gives you control instead of uncertainty. Tax law doesn't reward guesswork. It rewards awareness and planning. The changes affecting your 2025 return can work in your favor, but only if you approach them deliberately and with accurate information. If this breakdown helped you understand how the new rules apply to your situation, make sure to like the video, subscribe to the channel, and share it with anyone who will be filing a U.S. tax return in 2026. Staying informed is the most effective tax strategy you have.
Hello there. Are you currently navigating the complexities of retirement, or perhaps rapidly approaching that significant life milestone? The Retiree's Handbook is your dedicated YouTube guide for all retirement and pension news right here in the United States. It's crucial to stay informed about your financial future. We cover understanding pension benefits and maximizing your Social Security, ensuring you have the knowledge you need. Our channel provides actionable financial tips for retirees, helping you confidently make the most of your golden years. Don't miss vital information that impacts your peace of mind. Join our growing community today. Thank you for watching. Your financial security in retirement is incredibly important, and we're here to help you every step. Please subscribe to the Retiree's Handbook channel to never miss our latest updates and valuable insights. Join our community for continuous support, future pension news, and helpful resources to empower your retirement journey.